Nifty and Sensex sharply rebound from Monday lows, with the Nifty scaling its 2025 high as hostilities between Iran and Israel seem to subside. Broader market gains in line with the benchmarks.
ONGC and Oil India, they trade with cuts while oil marketing companies jump as crude oil prices fall to sub $70 per barrel mark, the lowest levels we've seen in the last week. This after US President Trump's ceasefire announcement relieves worries of oil supply disruptions.
Shares of KPIT Tech fall as the company in its mid-quarter update points to an uncertain business environment and lower than expected deal conversions on the back of tariff and geopolitical concerns.
Page Industries trades higher after Goldman Sachs initiates coverage with the buy rating and a target of around 52,000 rupees per share. The brokerage says industry inventory levels seem to have normalized and expects the outerwear segment to see consistent growth recovery.
And after a week of rallying, defense stocks fall on profit booking following US President Donald Trump's announcement of a ceasefire between Israel and Iran. Stocks had run up significantly in the wake of geopolitical tensions. Now the tensions abate, the stocks lower.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV18 Motilal Oswal studio. I'm Nigel and with me is Mangalam. And as you can see to the top of the screen, all the indices, they are blinking only green this morning. So it's a good start, Mangalam. You've got a couple of dips in today, but those dips are getting bought into, telling you the kind of mood the markets are in.
The markets are in good mood. And, you know, every 15-20 minutes, you have another sector that picks up pace. So the first dip that was bought into was led higher by the IT pack. So you have the Nifty IT index. And now if you pull up the metals index as well. So not only are we seeing some traction in the IT pack, we have the metals index, which has now picked pace as well. So the last few minutes, we have JSW Steel, which has moved higher. We have Nifty Metals moving higher. Tata Steel too has moved higher. Generally, the global sentiment, looking peaceful is good for the metals pack itself.
Yeah, that's right. And, Vedanta, actually, that one as well has moved up. It's taken support at around the 20-day MA, and I think that's gone ex-dividend. So that's why the returns don't appear that great. But, actually, that needs to be adjusted for the 7 rupees as well. So Vedanta is the other one that I'm looking at out there. It's the consolidated play on base metals, and you get exposure to all the base metals out there. So that's the stock I think I'll track.
A bunch of stocks doing extremely well, and we have, Delivery, which had seen a bit of a downtake over the last few trading sessions. There was a Jefferies downgrade that came by. The stock has done well now. Interglobe Aviation, of course, crude prices reducing and their market share increasing does well for Indigo Airlines as well. So a bunch of stocks doing well, nearly 2,100 stocks in the green for just under 500 stocks in the red. We have Somil Mehta of Mirae Asset share count for a quick technical check on the market. So, Somil, it has been fairly volatile the last 12 days or so. Now it seems like after a long time, the Nifty's broken out of the range. Do you think this is sustainable? And what are the next levels that you're looking at?
Absolutely. I think we've been stuck in a range for a little while. And today, I think we have broken out convincingly with a gap. Now, the next level to watch out for on the higher side would be 25,600. That would be my target for the short term. Medium term targets are definitely higher, which will be 26,300, 200 levels, which are all-time highs. However, we need to focus on the short-term targets, 25,600, with very stock-specific and sector-specific focus. As today, I think metals are doing good, railway stocks are doing good, and financials are doing good. So focus more on sector-specific and stock-specific. And on Bank Nifty, I think we've already broken out of the range, and the next target for Bank Nifty would be around 57,500, 57,600. That would be my short-term target for Bank Nifty.
Okay, got it. What about individual stocks, Samal?
Railway stocks, financials, and metals, three are the sectors which I'm focusing on. I have two stocks, one from financial, that is L&T Finance. This stock has broken out of a small consolidation on the upside, momentum indicators, fresh buy signal. So L&T Finance, great setup. Stop loss would be 192. Target would be 210. The next one is from the metal pack, the heavyweight Hindalco. Hindalco has broken out of a small triangle pattern on the upside, taking support at 200 daily exponential moving average. Great setup. Stop loss would be 645. Target would be 720.
All right, so those are a couple of stocks that Sumit has gone ahead and recommended right now. Believes that the next target on the Nifty would be 25,600 itself. A couple of these cement stocks doing well. Ambuja Cement has moved higher, and we're also seeing some traction in IEX and Siemens. So pull up those two stocks. We'll see the intraday chart. A bunch of buying ideas taking place right now in the markets right now at the high point for these names. So with that, we'll get you some more ideas for profit. We have Jitendra Gupta from Money Control Pro joining in with a stock. Jitendra.
Hi, thanks. I think Engineers India, which delivered strong performance in fiscal 25, deserve attention. Its order book stands at an all-time high of rupees 12,000 crore, with order inflow jumping almost 141%. Now the company expects margin to normalize, with management focusing more on cost optimization and control. Obviously, this will lead to higher margins going forward. International growth is another big push. EIL is opening a new office in Saudi Arabia to boost its presence in Middle East, and of course the overseas orders already contribute almost 2,800 crore to its total order. Management expects more orders from sectors like oil and gas, infrastructure and chemicals. In fiscal 25, international revenue rose by almost 32%. Currently, international orders are almost 13% of total order book. On the domestic front, EIL continues to reduce its dependence on oil and gas sector. It's a non-oil and gas segment such as chemicals and others are contributing almost 30-35% of its current order book. With a strong order pipeline, better execution, government push on infrastructure, of course, the cash in the books, EIL provides strong visibility for the next 2 years, and it is set to deliver strong earnings growth. Moreover, at 20 times its fiscal 27 estimated earnings, stock offers good value.
All right, with that, we'll take a short break. On the other side, Jitendra Kumar Agarwal, who's the Joint Managing Director at Genus Power Infrastructures, joins in to talk about their business outlook. Stay tuned. Welcome back. You're watching us here on Chartbusters on CNBC TV18. The stock on our radar is Genus Power. The company looking to continue its growth trajectory despite a slowdown in tendering activity. Currently has an order book of over 30,000 crore rupees. Where does this business go? And more importantly, what does the company promise for the future? We have Jitendra Kumar Agarwal, who's the Joint Managing Director of the company, joins in now. Thanks a lot for joining in, sir. You know, before we talk about immediate numbers, etc., we gather from market intelligence that last year, last week, there was a block which was launched by GIC. It was close to around 650 odd crores. Not sure if you're aware of, any communication, but that block was called off. Can you tell us if they gave you any reasons why, and is there a block which is likely in the very near future? Did you have a communication with GIC?
So, you have to understand one simple thing. GIC has two arms. One arm, they invest in the company as a shareholder, and one arm, we have created a platform with them. The other arm, we are not in touch with them on day-to-day basis, Chickwick's investment. So that particular arm and wanted to sell. This is the way they do the business. So once they've invested in the company has given them a great return. So they come out, maybe that is the way they work. So there's no communication between us regarding this block deal.
Okay,
right.
All
so
right.
The question is that, because business is, you're promising the business to be good, you've given them good returns, etc. If they wish to exit for the very near term, shareholders, apart from them, will have to face this liquidity event, right? So, just trying to understand.
So that is the business model of an investment firm. How they work is better known to them. But what I understand, they're getting very good returns. And you have to understand one simple thing, the platform which is created between Genus and Gemstar, that is what matters the most. Today, that platform has an order book of 28,000 crores. And further, we are bidding almost every tender that is coming in the country. So we are working very, very strongly together.
Okay, all right. Got it, Mr. Agarwal. So we'll keep this aside then. Let's focus on a little bit more on the shareholding, though. The promoter entity had sold some small stake in the company, right, in the last year. Any further plans for them to sell any stake? And if demand is strong for your stock, there is close to around, I think, a large trust holding. which whenever that gets sold, the money comes back to the company. Any plans of liquidating that? So if you clarify on both the promoter holding and the trust holding, will you look to sell it?
So currently, we don't see both of them. Neither we are going to sell our own holding or nor the trust. So company has sufficient funds arrangement for the current business, so none is required.
Okay, all right.
And just on Chiswick, just to complete that entire loop, they launched a block for 3.6% equity. They have about 15% equity. So at some point, this entire 15% will come into the market, right?
My common sense says that whatever they have invested, they have made much more than that. And with 3.6%, maybe that clearly gives them a very good upside. That is the only reason I can see behind it.
Okay, all right. Let's focus on business then. Since we're talking about GIC and that JV you briefly mentioned on, and as you mentioned, there are two separate arms. One part of the street is actually concerned with regard to these receivable days and the working capital cycle remaining elongated. Could you tell us what are the plans for this year? The working capital days that were last year, will they come down? If yes, by how much? And also your cash flows, will they turn positive? Because last year, in fact, you had a negative year.
So you have to understand the business. I'll take some time on this. The arrangement between Genus is all the orders are procured by Genus. They go to the platform, and platform is funded by GIC and Genus together. Then all the business comes back to Genus as an EPC player. So once we have a business as an EPC player, we start the project. And during the initial days of the project, all the investment is done by Genus Power. All this material is supplied by us, software is done by us, installation is done by us. And once the meters are getting installed, once you start getting the operation go live, which practically takes from the day the project starts to 6 to 8 months. After that, the cash flow starts coming in Genus Power. So all the projects you will see are in the initial stage. That is the reason you have seen the growth of, there's more investment in the working capital in last financial year. Even in this financial year, in terms of number of days, you will see every month it will come down. But in the overall value, because we are growing very fast, it will go up. So absolute numbers in this year, in terms of working capital investment will go up. But in terms of number of days, you will see improvement every month.
So when does your cash flow from operations turn positive?
So cash flow from operations turns positive. Almost it will take 12 to 15 months where it will become a very, very positive cash flow.
All right. And in light of all this that you're talking about, if you could give us a sense on what rate at which your revenues and margins can grow in FY26, but more importantly, FY27, given all those projects that you're writing right now, you will be executing later as well.
So we have given a guidance of 4,000 crores during our call. So we maintain that guidance, and I am strongly feel we'll do much better than that.
That's this year. The year after that?
Year after that, I further see a growth of 20-25% at least.
So you will do much better than 4,000 crores. One assumes that could be 4,300, 4,400 crores. On top of that, a 25% growth. So close to 6,000 crores by FY27 cannot be ruled out.
I cannot give any numbers right now, but I'm pretty confident on the way the business is going on.
And in terms of profitability? Margins?
The margins, we have given a guidance of 18%. So we will definitely beat the guidance.
Okay. All right. What about order inflow, sir? Yes, your order book is solid as of now, and it gives you many years of visibility. But of late, we haven't heard of any big order wins. Do you expect that to turn in the coming year? I'm not sure whether last year we had a lot of elections, state elections, you had the central election as well. So could that be one of the reasons? I'm not sure about that. But could you tell us, in the coming year, in the next 6 months or so, should we hear about some more order wins?
So just to give you a little idea about this, in this country, we have total around 300 million smart meters that has to be replaced. As on date, only 130 million smart meters orders has been decided by the government. So more than 50% market is still remaining. So we have a very good future ahead of us. At the same time, as on date, there are tenders worth 45,000 crores in the market which are live, which should get decided in next 6 to 9 months. So I see a very good order flow coming in next 6 to 9 months.
Could you give us a sense of what the order inflow could be over the next 6 to 9 months? Because 45,000 crores is in the market for you to bid. What would your pass hit ratio suggest?
So I don't want to get into that, but I can say we are a very, very strong player in the market and will surely do well.
Got that. And what proportion of your current revenue and order book is from India, and how much of that is from overseas? Because you do have a lot of new projects that you've launched, right? New products. Yeah. I think we are going through some...
Yeah, he's back.
Yeah, go ahead, sir. I think
Yeah, I could not hear you. I'm sorry.
I said, so what we're trying to understand is what proportion of your revenue comes in from overseas, what comes in from India, what does your order book mix comprise of right now? You have some new products that you want to sell outside of India as well, right?
So currently our export business is, in terms of percentage, is very, very low because the domestic business has grown multifold. And international business takes its own time to establish. Currently, we are focusing significantly on 4 or 5 markets where we see in next 3 to 4 years, we should have a revenue stream of at least 500 crores on our international market. But it will take 3 to 5 years.
How much is that export number right now as a proportion of sales, and where does that number go to over the next, say, 5 to 6 years?
So currently, we are doing around 90-95 crores in the international exports business, which we feel in next 3 to 5 years, the way we are working on some strategic markets, it should be around 500 crores.
500 crores. All right. And just a quick word on your capacity, sir. Getting orders is great, but what kind of capacity you have on a per annum basis, if you could quantify it? How many meters did you sell last year?
So last year, we made around 1 crore plus meters. Okay. And this year, we are already producing almost 1.4 to 1.5 million meters comfortably every month, starting from July onwards. So this financial year, we expect, yes, it will go up significantly.
And capacity?
So capacity, you can say, is around 17 to 18 million meters annually.
Okay.
And 20 million meters is required.
All right. And you don't need to put in any more capex, right? For now, 20 million is what you're comfortable with for you to get to that 6,500 crore revenue.
So currently, we will not be making any major capex, but yes, some tidbit capex continuously keeps going on in our business, but it won't be any major capex.
All right, we take that point. Thank you so much. Thank you so much, Mr. Agarwal, for joining in and giving us your outlook for this business. Close to 4,000 crores revenue, which you're confident of beating in this year. Margins around that 18% mark and 25% plus revenue growth in the year after that as well. Exports moving from nearly 100 crores to 500 crores over the next few years. That's about Genius Power. The only event that we need to watch out for is the liquidity that comes in from GIC at some point in time. With that, we'll take a short break. And as we do that, let's get you an important news update. Your favorite business news channel, that's CNBC TV18, which is India's business news leader, is now just a click away on the CNBC TV18 all-new mobile app, which gives you in-depth article, financial world updates, all that you need for finance at your fingertips. And you've got to download that app. Apple Store or Google Play Store is where you get it from, or just scan that QR code, which is up for you on the screen.
Welcome back. Well, keep an eye out on a few stocks actually from the broader markets. You have Swan that's actually moved to the high point of the day. So I think we should get that stock up for you on the screen. Bajaj Consumer, relative underperformer, but today the volumes are massive on Bajaj Consumer. So I think we should get that as well up for you. Swiggy is another name that was trading in the red just at the start of this hour. Swiggy's moved into the green. So big uptick is what you're seeing. And smaller metal counters as well. And if you look at Imfa, that stock has moved up. Mukund as well, the other one, the stainless steel player that the street is hoping that they'll turn around at some point of time. That stock as well has moved to the high point of the day. So some of these stocks in the broader markets are now standing up and getting counted.
Nigel, I'm just looking at a couple of these rice-based players because we don't know how much of the exact exports, etc., happened to Iran or how much of that was stuck from a listed company standpoint. We know the data for the industry, but these stocks were slightly worried when the uncertainty was on, and now they're picking pace. So pull up something like a KRBL. That's up 5% at the high point of trade. Kohinoor Foods up 2%. I'd like to see LT Foods as well. Again, these are companies where not a lot is exactly known about how much goes into Iran, etc., but they just play around on the sentiment of Irani's exports to of basmati rice and others. Now that there is truce, then the street is bidding them higher as well. KRBL, of course, is among the top gainers, up around 5%.
And the management we just spoke to, Genius Power, I think that stock as well has perked up a little bit post those guidance in terms of revenue growth, potential, as well as importantly, turning cash flow positive. That's going to be the important one to track. But on that note, though, we have completely run out of time on this edition of Chartbusters. You stay with us. The team of Trading Hour is waiting by.